Hello and welcome back to the ROI channel, the channel that's obsessed with the art and science of return on investment. Back today with a little part two, talking about eToro and the Popular Investor Program and what that is. Hopefully you haven't been too bored by my very probably over-impassioned part one, but it is a subject on which I'm super passionate. So therefore I had to rein myself in a little bit, but I got carried away. Today we're going to go into a little more detail and do something a bit more interactive, get away from the slides and just show you the, not the official back end, but basically how it works from a user interface point of view. And it's super easy to use. Everyone that I know that uses eToro really loves it. So today, contents, we're going to talk about how does it work, what's the minimum amount if you wish to copy or trade, and does it cost you, as in the investor, to copy trade? Do you pay me? The short answer is no, but we'll go over that. Then you say, okay, well, how do copy traders get paid? We'll talk about that. How does eToro make money then? And we'll talk about that, and just a few other key points. So we'll get straight into it. How does it work? So I've literally just taken this from eToro and copied and pasted here. I suggest that you go and read it. They really do have everything very thoroughly laid out in easy to read terms. So basically, when it comes to popular investing or copy trading, if you're downloading the app, let's say, and you want to copy the portfolio that I manage, the Crassus Investments, then you would simply choose that. You go into the search bar, and I'll show you how to do this, and then you find an investor that you like, you add your funds and you click copy. Okay, so once your account is set up, it's super easy. And what that does, it takes your funds and it mimics the portfolio. Okay, so it automatically just goes, okay, whatever amount you put in is split up into the percentages of the assets that I have allocated. So if I've got 10% in Apple shares, for example, it would take if you put in $200, it would take $20, okay, 10% of $200, and allocate it to Apple, and so on and so forth. You get the idea, and that's it. It's really that good, simple and easy. You can start or stop whenever you want. So difference between private equity, if I go out and raise funds as private equity, then those funds are locked up with me for a long period of time because we're investing in privately owned businesses. They're not listed, there's not the liquidity. So if you invest there, you don't necessarily have control over when you get your money back. It's all part of the prospectus and the private placement memorandum of that particular fund. So you can start copying and then decide, no, I don't like that. I don't suggest you do that because that's a losing gambit over time, but to illustrate the point, you're in complete control over your funds as to when you start and stop. What's the minimum amount? Okay, so technically the minimum amount for me is $200. That's not always the best idea to go $200 because depending on the size of the portfolio, so if a portfolio has many positions, for example, at the moment Crassus has 40, then depending on the size, it may not allocate them. It'll sync as closely as it can, but it might not be perfect. Whereas if you were to put in, say, $400 or $500, usually that accounts for a perfect sync and a perfect split, even in a large portfolio with lots of different positions. You're also not locked into any one copy trader, so you can copy many different people, up to 100 different copy traders at a time. So you can copy me, you can copy someone else, up to 100 at one time. So that's pretty cool. You can have some extra diversification. The maximum allocation for copying a particular user is at the moment 500,000 US. Okay, so there's the minimum, there's the max. Pretty straightforward. And does it cost you to copy? So the short answer is no. There's no additional charges for you to copy trade, which is fantastic. I mean, if you were to buy even a listed ETF, so a list of lots of different stocks in one exchange traded fund, ETF, then obviously they would have a management fee and transaction fees and brokerage and so on and so forth. Every time that particular fund changed its weightings, there'd be obviously buying and selling fees, brokerage fees, and so on, and that can add up to many different fees throughout the course of even 1 year. Whereas let's say you're copying Crassus and I make a change, I add to a position, I sell a position, whatever the case may be, you're not charged any extra for that. The software automatically just syncs and updates your portfolio as the particular copy trader or portfolio manager updates the portfolio. eToro is a social trading platform that allows you to copy other traders of your choice so that any trades will open automatically with a proportional percentage of your allocated funds. So that we've covered that in terms of the syncing, and then from there on in, you don't have to keep updating manually. The software is all over it, and if I make changes, those changes are mirrored in your account if you happen to be copying my portfolio. So that's pretty cool. So you think, okay, well, what's in it for you? Well, copy traders can get paid, okay, if you meet certain criteria, and they are quite stringent. I've just started doing a professional investment management course that they have, and so there are quite a number of obstacles or hurdles over which you have to jump. So popular investors are paid based on their assets under management. So AUM, assets under management. However, breaching any popular investor guidelines or not meeting the requirements will result in payments being revoked. So if I mess up or I go outside the lines, eToro doesn't have to pay me. It's eToro that's paying me, not you as the investor or the person putting funds into the account. This includes not breaching leverage restrictions or risk scores. So I have governance over how I can allocate those funds. They're pretty reasonable. You do get quite a bit of freedom as a manager, so that's good. But obviously they don't want people to be upset with the platform. They don't want people going on and copying a bunch of cowboys and losing a heap of money. So they're quite good in terms of, I think they've got the balance. They allow me to use some leverage, but if my risk score for the fund starts to climb above a certain amount, I'm disqualified from being able to be paid. Not meeting the equity requirements, so that means I have to keep a minimum amount of my own money in the fund, and those funds do not count as assets under management. Okay, so we've got Crassus over here. I have my account. I have to put in a minimum amount of my own money, and I have to maintain that over time or increase it if I want to get to the successive peers. That does not count when eToro scores my assets under management for the purposes of grading me as a popular investor. So that's that. Or disrespecting others or abusing on the feed. So this is where I need to keep my mouth shut and take a deep breath before responding to some of the comments. But I've never actually had any bad ones. A few silly ones where someone's asking me about something that I clearly covered in the investment case, but it's all good. The fixed fees as a percentage of assets under management, as I mentioned. So eToro want more people on the platform so that they can make money via the spread, which we'll talk about, and eventually they'll make a lot more money by advertising and all these sorts of things and having access to an integrated network. So they want to be, in a weird way, I suppose, kind of like Facebook. They want to have as many users as they can, and that's why they have to keep their reputation up to date, and they have to keep the popular investors, such as myself, we have to toe the line, so it doesn't reflect badly on eToro and they start to lose the user base. So they've grown. Their growth is testament to how well they've done. Okay, so here are the basic. I believe they've just changed this, but anyway, when I passed the popular investor criteria in the program, this is how it was. So I'm just going to relay it to you here. You start off at this tier, the cadet, and then you're a champion, and then you're an elite, and then you're elite pro, okay? It's not easy to do that. There's a lot of criteria. There's qualitative and quantitative criteria. So you have to have a certain number of copiers to get to one level, and then the next level you have to have a certain amount more, and so on and so forth. Same deal with assets under management. So it's all about, can you attract people to your fund or your portfolio, and can you grow those profits over time so the assets under management grow as a result of people adding in more funds because they're happy with the returns, and obviously the returns themselves increasing the balance of the funds which you manage. So monthly payments are listed here, and again, they've been updated, and I get a few perks that aren't listed here, so you get access to information. eToro are very good in terms of paying you to do some of the education, which is good. They also pay for some subscriptions to things like the Wall Street Journal and other software that you use in terms of getting analyzing companies' information. So the software that you get the information, oftentimes if you want good information, it's not free. So it's a good program, I have to say, in that regard. If you can pass the stringent criteria, they do look after you. Okay, so you think, okay, well, how does eToro make money then? If you're getting paid by eToro, then, and I'm not paying you, and I'm not paying brokerage on eToro, how do they make money? And good question. You will get your head around it. It's really not that hard. So again, bit of copy paste here, but eToro makes money via the spread it applies on trades. It also charges overnight, weekend fees, and withdrawal fees, and currency conversion fees, as well as inactivity fees. So you think, oh, hang on, that's a lot of fees. It only applies for leverage positions, and you do not have to use leverage positions, and you probably shouldn't unless you're a professional and know what you're doing. So if you leverage up, you're essentially borrowing money or borrowing on margin, and so there needs to be a fee. You're essentially leasing out extra shares that you don't own. And if you do the same with currency, often people leverage up their currencies. So they don't just buy on a one-for-one basis, a dollar for dollar. They might put in $100 cash and buy $1,000 of the target currency. And so obviously you're leveraged up, and that has to come from somewhere. So you're paying fees on the borrowed funds. That doesn't really apply to most people, because you should avoid leverage. And the holding costs essentially will be negated. You won't have to worry about that at all. Inactivity fees, I wouldn't worry about that. I think it's if you don't make a trade in 6 to 7 months, they charge you like $5. Please do go and read the T's and C's and the fees on eToro. They'll obviously have everything up to date on their website. But from what I can see, it's really not a big deal. If you're doing what I'm aiming to achieve with the Crassus investment portfolio, you're putting in an amount of money, dollar cost averaging in every week or month or 2 months or whatever you can afford to do, then you won't have to worry about inactivity fees at all. Good news is that the spread remains the same regardless of whether you're copying someone or trading manually. So there's no extra fee if you copy someone, because when you put your money in and they go and buy the positions to mimic the copy traders, the spread is the same as if you were to go out and manually place those trades. Okay, we'll talk about what that is in a second. Don't stress. More than 20 million users across 140 countries are now using eToro. Easy to see why, for a variety of trading purposes. As of today, more than 335 million trades have been placed on the platform. So very, very safe platform, encrypted. Everything's really well thought out from go to O in terms of how easy it is to use, the safety, the privacy, and the ability to do really well, the access to global markets that they have and many different asset classes that I spoke about in part 1. Here's a link that I've just left there to a really great article. It's not by eToro at all. It's from an outside source, and they explain what it is and how they operate. So a good article, and I suggest that you read it when you get time. So what is this spread that I'm talking about? Every instrument on the platform has two prices, a buy price and a sell price. This is how markets work, essentially. Okay, the difference between the two prices is called the spread. If you think about a bank, for example, a bank borrows short and lends long. So it might borrow short-term or overnight funds at a very low interest rate. In Australia, currently the reserve rate is 0.1, so 10 basis points, so 0.1%. And then they charge you your mortgage, they lend you the money, and they give you a mortgage at, let's say, 3%. So they collect 3%, they have to pay the central bank 0.1%, and they collect the spread. So that hopefully that helps you to understand what a spread is. In that case, it's a credit spread. In this case, we're talking about a commission spread. The spread contains the commission that your broker, in this case eToro, charges for the trade. Okay. As soon as you open a trade, it will open at the buy price, but the current rate shown in your portfolio and on the charts will be the sell price, and then it will adjust second to second on a marked to market basis. So as the values of a given stock that you bought rises and falls, your shares will be marked obviously in real time. So for example, if you buy Litecoin at $40 and the sell price at the moment is 39.25, the spread is the difference between the two. 75 pips or 1.9%. Okay, so let's go into that to make sure you understand. Again, it's not really that hard. You'll get the picture, I'm sure. Say you want to buy Apple. Okay, instead of paying a fixed brokerage for a fixed amount like you do on traditional brokerages, You go and you say, okay, the buy price is $148.82, and presumably you accept that price because you want to buy it. What you'll do is you'll pay that price for your share. eToro will go and buy the shares. They'll make a market and they'll transact on the opposite counterparty, okay, the counterparty, for $148.55. They'll keep the difference between the two, okay? So that's how it works, okay? So in this case, I think, what is that, 27 cents, okay? Mental math. Then you've got a very small spread on a per share basis. So for every share, they'll keep that 27 cents or whatever I mentioned, and that's the spread that they keep, okay? So it works out to be pretty good most of the time. All right, other key points. So eToro is attracting some serious talent away from traditional funds. Major advantages of eToro. I've spoken about this before. So your entry-level investment, if you are just starting out, if you're a young kid, or you just, you haven't saved, or haven't made a lot of money, whatever, you can get in at a much lower level than what you could if you were going to have access to those same individuals potentially that are now running funds on eToro would have been running funds elsewhere, and you probably couldn't invest in them. So instead of getting in for $200, if you go to any decent sized hedge fund, they'll want $1 million. But if you got lucky, they might let you in for 100,000. Okay, so if you're not even close to having $100,000, then forget it. They're not even going to take your funds. The next thing is the fees. So not only can you just get in for a minimum of $200 if you wanted to copy trade, then you've got your fees to contend with. So there's no fees for you to copy my portfolio, right? eToro pays me. They make money off you from the spread, as we've just discussed. Compare this compare and contrast to a hedge fund, a private hedge fund, or even a publicly listed hedge fund. It's commonplace for them to charge 2% management fee and 20% of the profits. Okay, traditionally, if you were to invest in Jim Simon's medallion fund back in the day, those numbers are more like 4 and 40, 4% management and 40% of the profits. Okay, so you can clearly see that you're ahead in terms of the fee structure here, which is something that I really like. Liquidity. So as we mentioned, you can deposit and withdraw on demand, and completely up to you in accordance with your schedule, and it's extremely easy to use. So you don't need a degree to work out how to use eToro. Very intuitive. You play it around. It's very simplistic. You buy and sell and the amounts and so on and so forth. You can set stop losses. You can set take profits. You can do all of that. So it really is a great platform. Okay, so thanks for watching. Before I get into the disclaimer at the end, I just want to take you through a little something. So if I can work out, there we go, a little bit slow today. All right, so we're on eToro. This is what eToro looks like from a demo account. So I've just got a demo account here, and I've typed in the search bar Crassus Investments. Okay, so I type in the search bar. This is what comes up. So you can see my news feed, you can see what I've been posting, and this is you can set watch lists and see what different commodities and stocks are doing all around the world. You can search by different markets, all that sort of thing. I'm sure you can work that out in your own time. And so, for example, you can see some of the content that I post here and I post on YouTube, and so you can go and see my analyses of different companies. You can see the performance of the fund. So you can go into the stats, for example. Not sure why this Australian internet's terrible. Here, and okay, so that really annoys me, as I talk about all the time. That was like 2 days worth of July, and we happened to be down, and they marked me down for the month. Very annoyed, but anyway, that's okay. Not a fair reflection. And so we've been going well since. So you can see the monthly performance, and then you'll see it annualized. So we had a drawdown. S&P was double that, so we missed out on more than half of a drawdown, which is good management. And obviously October we're doing really well. The positions are starting to take off, and the market is happy with where we're positioned. And you can see real time what I'm invested in, and if you're copied, you'll have your own mirror that will show you the respective percentages. So if you go by the weight of investments through here, you'll be able to see, okay, all the different positions that we're in and the mark to market performance since we've held those positions. Okay, so we're still holding 8.8% in cash. We're up 2.8%, 87% on the month, I think it was, and so things are looking good. Thanks for watching, guys. I hope that was helpful. I hope that gave more of a kind of an over-the-shoulder view of what's going on and what eToro is, if you've never heard of it or used it. I encourage you to download the app, and even if you just set up a virtual account and play around, decide if it's an account that you want to use, because it is very easy. And obviously, as I said, the low commission structures is certainly advantageous to you over time. So I'll leave a link in the description to the fund if you want to jump on there and either add us to a watch list, or as you saw before, there's a copy button. Once you download the app, all you need to do is add your funds and hit copy if you decide that you like the way that we invest and you want to copy along the coattails, so to speak. If you haven't already liked and subscribed to YouTube, I'd really appreciate you doing that. It helps with the algorithm. And obviously, the standard disclaimer: I'm not your financial advisor. I have no idea who you are watching this necessarily. Okay, so I can't give specific advice, because obviously that wouldn't be appropriate. These are just opinions and general educational or entertainment points, and you are responsible for your own decision making, so please do take it seriously. Take responsibility for your own actions and decisions, and do your own due diligence. Okay, make sure that what you're hearing about on the internet is correct, because it may not be, and from day to day, obviously things change. So keep that in mind. Thank you for watching. I'm going to leave it there, and I'll be back with probably another standard stock video another time. I'll see you then.